Hello everyone, just a quick snapshot of where we think everything is with the property market and how that fits into the economy at the moment. Because what we've seen is that prices have been pretty robust in the face of the COVID-19 situation in Australia. So according to CoreLogic's index, there's been a 0.4% growth for the month up to 21st of April. So whilst we probably would have expected prices to plummet in a way, the lower listing levels, so the lower amount of properties being put on the market for sale, has obviously withheld supply, keeping prices quite steady. But I think the concern now, especially as case rates start to decrease, is what this is going to look like going forward. I think there's a number of concerns. So from the RBA this week, there's some expectations that economic output will be reduced by 10% by June 2020 coming up, that total hours worked will be down 20%, and that our unemployment rate will hit 10%. And just remember that unemployment rate doesn't even cover the underemployment rate, which is a lot more relevant but harder to measure, so not normally part of the conversation. But that was already a big lurking factor in Australia. That's going to be even bigger now. So it's going to be interesting to see how all these things tie together post, as we lift lockdowns, as we slowly get back to work. Because the economic damage is definitely going to be there, and it's definitely going to uncurl itself further in the coming months. I'm sorry to say. For some people that's opportunity, for some people it's different. I mean, we're putting off a lot of things like rent deferrals, we're putting off mortgage repayments and interest, and there's a lot of concern that as these things are backed up and stacked up, that they're going to cause a lot of distress to an economy that's already, our households are already very highly leveraged. There's a lot of debt. Australian households have been right up there in the world in terms of most debt leverage, most mortgages and whatnot. So there's a concern that there's going to be more stress put on here, and I think quite clearly interest rates are one thing we're going to see on the floor for a very long time, just because if they move anywhere vertically, it's going to be very difficult for people to be repaying those mortgages. So it's hard to anticipate exactly the fallout. I think personally, I think a lot of listing activity will remain quite tight. Supply is going to remain quite tight. So there's already, before Corona's impact, there was already projections from economists and big four banks that a level of supply was going to dip under our level of demand by 2021. I think any new stock being built is only going to get be slowed down even more. Meanwhile, if we're maintaining our population growth, then we're going to have more of that demand for housing. I think on one side we need the rents to steady, so that might steady our rents a bit. But again, we've just got this huge curveball of all these deferred rents and now a massive underemployment reality. So it will be quite uncertain. I think there will be flatter activity and maybe a slight retraction in prices, but we're going to have to see how it all folds out, and I will keep you all posted.